I'll just do a brief introduction. Good afternoon and welcome to everybody for joining our fourth landlord webinar today. Just to introduce myself, for those that don't know me, I'm d.Clarke. I'm the Lettings and Property Management Director at Nock Deighton with over 30 years experience in the Shropshire and Worcestershire lettings market. Joined today by two experts in their specialist fields. First of all, Scott Rawlings, who is the Director of Mortgages at Radcliffe and Newlands Limited. Scott advises individuals at all levels on their mortgage options, and being a property investor himself, he specialises in buy-to-let mortgages and mortgages for limited companies. My second guest speaker is Meera Shinderoy, who is the Deputy Policy Director at the National Residential Landlords Association, the NRLA. Meera will provide a legal update today on all matters relating to the private rented sector, including the recent changes to the Section 21 notices, right to rent checks, and the proposed changes ahead. All those present at the live presentation today will have the opportunity to ask the speakers questions by entering these in the chat box at the bottom of your screen. I'll read those questions out to each speaker at the end of their presentations, and we can carry these on at the end if necessary. So without further ado, I will pass you over to Scott, and I'm just going to change the speaker view as well, and Scott's just sharing his slides here.
All good to go?
All good to go, I think.
Right, thank you, Dawn, and good afternoon, everybody. So yes, my name's Scott Rawlings. I'm a mortgage broker, I'm an investor myself, and I'm going to spend the next sort of 25, including questions, just running through as much information as I can really about mortgages. Some of you might be new to the world of buy-to-let, some of you might have several, so I'll try and make it relevant across the experience range basically. But what I'll do is I'll give you a quick introduction to myself and my company, and then we'll get straight into it. So I've been advising on mortgages for about the last 20 years. My company is Radcliffe and Newlands, and we are independent financial advisors and mortgage brokers, and we can help really on the mortgage side of things with any area of finance for property. So that's commercial, residential, buy-to-let, bridging, all that sort of stuff. Seen a lot happen in the last 20 years in the world of mortgages, and I've put on the slide here that I bought my first property in 2004, and I've put that it's new build. The reason that's relevant is that I still own it today, so I became an accidental landlord, and it's actually interestingly still worth less than I paid for it in 2004. So probably not my finest hour in terms of property investing. However, luckily it's on a nice low tracker rate from back in the old days when you could get those really low tracker rates. But from that point, I decided to get educated in the world of property. And so, yes, I'm now an investor as well as a mortgage broker. And I think it's quite useful that whoever's guiding you on your journey, whether it's on the legal side or the accounting side or the mortgage side, if they're an investor themselves, then they'll understand the challenges that you're facing, as well as some of the strategies that you're trying to achieve. So that's me on the screen at Peppa Pig World. If you've not been there, definitely go and check it out because it's awesome. I've recently written a book on the subject of mortgages, and I've got a podcast out about it, but that's aimed at first-time buyers. So not so much aimed at investors, more first-time buyers. But if anybody knows that someone that is a first-time buyer or looking to get on the ladder, the podcast is called Getting on the Property Ladder, the podcast, and the book's called Getting on the Property Ladder, and that's by me, and that's on Amazon and Spotify and iTunes and all that sort of stuff. So just in terms of my company though, Radcliffe and Newlands, I've got a big team of mortgage brokers. As I said, we can help with everything in terms of financing your property deals. So what I'm going to do first, I'm just going to start off with some really basic do's and don'ts from a mortgage perspective. Then I'm going to go into a bit of detail about the sort of thought that needs to go into getting the right finance for your property deals, and then I'll just cover off some other specialist areas. And I'm going to definitely be leaving time for questions, so as Dawn said, think of your questions and pop them in the chat box. So definitely be on the electoral roll if you can. I do not know why it makes such a big difference to credit scores, but it really does. So if you can get on it, definitely be on it. And also make sure that the way they write your address on the electoral roll is the way they write your address on things like your bank statements, because a comma in one and not in the other can mean they don't match. Ideally, have as clean a credit as you possibly can, and check your own credit. Remember, you can check your own report as much as you like, and it will not affect your score. But if you went to lots of banks and asked them to check your credit, then each time they check it, it makes your score slightly worse. But yeah, you can check your own as much as you like. You can, by the way, if you're about to embark on a purchase, you can get a decision in principle done. We just need basic info to get one of those done, and you get a piece of paper that says you can get a mortgage. Sometimes they're useful to show to agents that you can get a mortgage, but actually a lot of the time you might get one of these done, but then find that that lender won't actually lend on the type of property you're doing, or you might be renting it in a way that that lender doesn't quite like. So they're not essential, but they're quite useful, and we can definitely get them done quite easily for you. And obviously make sure you're paying things on time, etc., and try and pay more than the minimum, because the banks like to see that. So in terms of don'ts, for some reason, there was a couple of lenders where if you've got lots of unsecured debt, and by unsecured debt, I'm talking about credit cards and loans really. If you've got lots of that in the background, even if you're paying it on time, the way their scorecard works is you'll probably fail their credit score. Not because you've got bad credit, but you've got too much unsecured debt. So someone like the Mortgage Works, for example, they don't like a lot of background debt. However, if you do have that, don't worry. There are lenders such as Birmingham Midshires. Their scorecard doesn't take into account unsecured debt, so you wouldn't have an issue there. But in an ideal world, try not to have too much on those sorts of things. Also, don't get lots of decisions in principle done, because as I said, every time a bank checks your credit, it makes your score worse. So you don't want to be doing that. And also, once you're getting into the world of property investing and you're doing quite a few deals, try not to use lots of different mortgage brokers, because there's a chance of getting different information. So I'll give you an example. If you said to me that you were self-employed for 2.5 years, I might put on the application that you've been self-employed for 2 years. I might round it down, but another broker might round it up to 3 years. And then suddenly you've got 2 different bits of information in the lender's systems, and they don't like that. So the best way of avoiding that is to find a broker that you really like and work with that person consistently, and then you'll know the info is consistent. Okay, so those are your basic do's and don'ts. And now I want to get into a bit more detail about when it comes to financing that deal. So it's not just a case of calling your broker and saying who's the best provider for this deal. You've got to run through a few things. So first of all, we want to make sure that you are going to fit that lender's criteria. So for example, you might be a first-time landlord. If you are, there's lenders that are totally okay with that, but there are some lenders that will want you to have experience, and some need 6 months experience, some need 3 years experience. You might be a first-time buyer. Maybe your first ever purchase is not for your house to live in, but it's for a buy-to-let. There's not many lenders that do that, but there are some that will. We need to look at your income. So some lenders have a minimum income requirement. You know, they want you to have that minimum 20,000 or 30,000 minimum income. Some lenders might have a limit on how many buy-to-lets you can have in total. So if you are planning on building a big portfolio, we probably want to use those lenders that have limits early on. Of course, they're going to be looking at your credit history. Limited companies is really, really popular at the moment. So a couple of things to talk about on the limited company side of things. So as to whether you should hold it in a limited company or in your personal name, that's really advice that you need to get from an accountant, because the reason to do it is for tax benefits. So it's the accountant really that will guide you as to which way to go. But just so that you're aware of a few things from a mortgage perspective. Number one, that limited company can be a special purpose vehicle, a brand new off-the-shelf limited company. It does not have to have a trading history. Most of the banks like it to have certain SIC codes, normally the ones for buying and renting out properties, but there's a bit of flexibility within that. And what the bank does is they look at the directors of that limited company. So they'll look at the director's credit score, they'll look at the director's income, they'll look at the director's experience, etc. In terms of how it affects mortgage interest rates, so if I was comparing a single let, so you're buying a house and you're renting it to a family on a 6 or 12 month assured short-term tenancy, if I was comparing the rates in owning it in your personal name and comparing it to a limited company name, I'd say the difference in interest is probably about 1%. So you're going to pay 1% higher by putting it in the limited company. So you need to make sure that the tax advantages outweigh that 1% that you're going to be having to pay extra on the mortgage. Interestingly, though, if you're looking at the world of HMOs or houses of multiple occupation, the rates, whether it's in your personal name or a limited company name, are exactly the same. So from an HMO perspective, it doesn't really change the mortgage interest rate, whether it's limited or not. So a lot of people in that space do go down the limited company route. I'll talk a little bit more about limited company a bit later. And then finally, we'll be looking at whether you're a portfolio landlord, because if you are, i.e. you've got 4 or more properties, including this one you're buying, not only do they look at this new property to see whether the rent stacks up, etc., they'll also look at your current portfolio to check that stacks up. And if it doesn't, they might not lend on the new one. So that's the first part of the puzzle. Are you going to fit that lender's criteria? Second part then is, will the property be okay for that lender? So for example, some lenders have a minimum valuation. I don't know where in the country you can get properties for under 40k at the moment or under 50, but banks, there's lots of banks that won't lend if the purchase price is less than that. The property normally for a normal buy-to-let mortgage has to be in a lettable condition. So in other words, would someone pay you money to want to live there? And that's at the point of completion. So it has to be, you know, when the valuer goes around there, he has to look at the condition. If it isn't in a lettable condition, then there are specialist products that you can get. So specialist refurbishment products, for example. I bought a house once that didn't have a staircase, but it did need a staircase because it was on 2 floors. So obviously that wouldn't have been lettable. So we got a specialist product for that. Then they might be looking at the construction, you know, certain concrete constructions, certain timber frame constructions are a bit difficult. Any buildings with cladding at the moment are a bit tricky. So you might have heard about the EWS1 forms that you need. So it's important to check that that has that if it's got cladding on it. 6-month rule. So when you buy a property, let's say you buy a property for cash, or with bridging, for example, lots of banks don't let you refinance that property until you've owned it for at least 6 months. Some do, by the way, but lots will want you to wait 6 months. But that 6-month rule also applies to the person you're buying the property from. So if the vendor hasn't owned it for 6 months, then there might be less lenders that we can go to for that. And then finally, distressed sale. Lenders are pretty cautious around this. So this is where a property is worth 100, but you're getting it for 60,000. Certain lenders would look at that and go, whoa, what is going on here? We're a bit concerned. How is they getting it such a good price? There might be something dodgy going on. So they'll be looking at the property basically to see whether that fits. And then finally, it's looking at what you're trying to achieve. What is your goal? If it's a property that you're planning on buying and doing up and selling, you shouldn't really use mortgages for that sort of thing. Mortgages don't like to be used as short-term finance, but instead you might be buying it to do it up, and then you want to pull some equity out based on the new value. So we might want to make sure that that mortgage that you use initially doesn't have any penalties, so that we can move it to another lender based on the new value when you remortgage it. Instead of remortgaging, you might just go back to that current lender and borrow a bit extra. Maybe it's just a buy and hold. You're just going to hold it for a long time. Maybe you need some cash back to help, or maybe you want the lowest fees possible and maximum cash flow. So we'll be looking at your strategy as well. So only with those 3 bits of information, so you, the property, and your strategy, can we then work out which is the best way of financing that deal. So hopefully that gives you a bit of insight into the process and to why us mortgage brokers will ask you lots and lots of questions. couple of other areas to mention while we're here. Expats, we get quite a few inquiries on that. There's not many lenders, but there are lenders that will lend. So if you are in that situation, it's quite a specialist area. I'd probably suggest getting in touch and we can look at your lending options based on your situation. Same for foreign nationals, much less lenders, but they do exist. That, you know, they are willing to lend, but again, it's a specialist area, very specific to do with income and things. So probably best to get in touch with any inquiries on that. And then generally speaking, other areas. So limited companies, as I said, really popular at the moment. Rates are coming down a lot, actually. So, you know, earlier I said that the difference between putting it in your personal name and putting it into a limited company name was about 1%. Probably about a year ago, that difference in interest rate was probably about 2 or 3%. So limited company lending rates are definitely coming down in line more and more closely to holding it in your personal name. And at the moment, in your personal name, there's buy-to-let rates that begin with a 1. And in your limited company name, there's buy-to-let rates that begin with a 2, maybe at the sort of up to sort of 3 level. So there's some really good rates in that space at the moment. Commercial lending is quite a useful tool. The reason is a lot of the banks that you go to for a mortgage will have a computer says no situation. So if it doesn't tick a box, they won't lend. But with commercial lending, it's a blank piece of paper. You know, what are you looking to do? And they look at each deal individually. So that's quite useful. A lot of people are often funding their buy-to-lets via the equity that they've got in their main residence. So a really good thing to use for that is a drawdown mortgage. That's where, let's say you've got a mortgage of 100,000 at the moment on your main home, and let's say your main home is worth 400,000. You might put a drawdown mortgage on there for a total of 300,000, which then means that 100k mortgage is obviously as before, but then you've got a 200,000 facility that you can dip in and out of as and when you need it, and you only pay interest on it once you've dipped into it. So you might have a property purchase coming up, so you pull 50k out to use as a deposit, but then you might refurb that and refinance it and pull some money back out, and you might put that back in. So they're quite a useful way that a lot of people fund a lot of their buy-to-let deals. Then it's things like bridging finance, auction finance, and at the moment there are lots and lots of new banks coming into the world. There's a lot of challenger banks who are really keen on landlords. There's a lot of building societies that are offering really, really useful criteria at the moment. So there's loads and loads of lenders, but a couple to watch out for. Together, they don't have the best rates, but if you're struggling to finance a property because there's something weird about that property, Together will lend on any property basically as long as it's got a title. So they're quite useful. Foundation are useful lender once you've got quite a lot of buy-to-lets, and some lenders are saying no because you've got too many. Landbay are good for expats, as I mentioned, and Pepper are good as well if you've had credit problems in the past. As long as you've been good for 6 months, there's certainly an option to look at. And then finally, I'm just going to leave you with this. So different lenders have different things that they're good at from time to time. This changes, by the way, quite regularly. So this is a snapshot of things at the moment, but next week it might be a few different lenders. So certain lenders are quicker than others. BM, you know, we've had offers out in 5 days. Godiva, who are part of Coventry, they could be quick too. I mentioned there's not many banks that lend to first-time buyers, so those lenders you could consider. I also mentioned minimum income earlier. So some lenders like you to have a minimum income of 20,000, but there's a few lenders where you don't need any minimum income at all. So if you're perhaps putting the buy-to-let in your partner's name for tax reasons, but they're not earning, then these lenders would be useful for that. And then HMOs, very popular at the moment. Aldermore are useful because they don't credit score. Together and Mansfield, if you do find a property that's under 40 or 50k, they might be useful for that. And then again, large portfolios, remortgaging within 6 months. I'm going to leave this on the screen just for a few minutes, by the way. Yeah, so these change, by the way. So if you are using it as gospel, just assume it's for today. but really what you should be doing is speaking to your broker, and they'll give you an idea on what your different lenders look like for each deal, because it will depend on the rates and they might change their criteria as well. So as I said, I deliberately leave some time for questions. I think we've got probably 5 or so minutes for questions, but in the meantime, please do take a note of these contact details. Please do get in touch. All my team are working remotely at the moment, so we can help people up and down the country. We can do Teams calls or Zooms calls or what have you. So yeah, do get in touch, and we'll happily sort of run through any of your inquiries. Now, normally there's quite a lot of questions that come in, but I don't know whether we're going to get any today. But Dawn is Dawn is in the studio. She can talk me through what we're seeing on that side of things.
Well, I can't see any questions that have come in as yet. Everybody's being very quiet today, I think.
They're just wowed with the content.
Yes.
Their brains are fried with all that info.
There must be, yes. But I just find it really interesting to see the different mortgage lenders who sort of specialise in different sort of like you say, property types, and also you know, people's circumstances.
Yeah.
So yeah, it is really interesting to learn that, because having just gone through a similar situation myself, getting a buy-to-let mortgage, and Paragon seemed to be the best ones for me. But they just go into so much detail, and I was forewarned of this previously, that you know, they want to know absolutely everything, and it just feels, you know, like I've been completely stripped of absolutely everything.
Inside leg measurement, have they asked you that?
Absolutely, yeah. It's so I'm glad I was sort of forewarned about that, but yeah, it was quite interesting sort of learning experience on that one.
Yeah, so here's what I say to people actually. So there's lots of different lending institutions. So the banks, the high street banks, that's where you will probably get the lowest interest rates. But there you have to tick the boxes, and it's often a computer says no. Then you've got the building societies who won't compete on rate, but they're really still quite competitive rates, and they're a bit quirky in the criteria that they offer. Then you've got the challenger banks. So this is the likes of, I don't know, Fleet or Shawbrook. And they're really keen on landlords. You know, they are just lending to landlords. They don't want to lend on people buying their own home. So they've got some really niche products and specialist areas. Then you've got private banks who are super flexible. Then you've got bridgers who again are super flexible, but obviously bridging is a bit more expensive. So there's a huge range of places you can go to fund your deals. And yeah, just knowing that they all exist is often, I think, quite comforting for an investor, because they know that, yes, if the bank does say no, doesn't matter, there might be a building society that it fits with, or a challenger bank. So it's useful to keep that in mind, that there is lots of places to fund your deals, basically.
Yeah, and that's really obviously one of the benefits of going for a mortgage broker rather than going straight to the lender.
Yes.
Absolutely, yes. Right, I've got another question that's come in from Richard, who has said, if you recently changed jobs but in the same industry, what are the choices for getting a new mortgage, even short term?
So each lender will have slightly different criteria. Most of them, if you're in a new job, that's fine, as long as you're you know, you've got some track history in that industry. The important thing here, though, is probationary period. So if you do have a probationary period with the new job, some lenders will want you to have waited until that's over. So whether that's 3 or 6 months, but lots of lenders are totally okay with probationary period. So the short answer is, even if you're in a probationary period, there will be lenders that you can go to. Some will do it based on a contract, so you might not have even started a new job and they'll still lend to you. Some will want you to have waited until you've had your first pay slip. Some will want you to wait until you've had 3 months pay slip. So short answer, there will be lenders that will lend to you. Longer answer, the longer you've been in the new job, the more choice of lenders you'll have, basically.
Right, that's good. Thank you for that. I hope you found that useful, Richard. And I had another question actually that I was thinking of, a property that we've had on the market recently. at Nock Deighton, which is it's one with a flat roof.
Mhm.
Are there certain mortgage lenders that that do or don't lend on properties with flat roofs? Is that a risk?
Yeah, so the key question is what percentage of the roof space is flat? That's quite key. So under 20%, pretty much any lender is totally fine with that, because there's lots of properties with garages, for example, that have a flat roof, but the main roof isn't. So under 20%, you've got no issues. Once it gets to more than that, then yes, you would probably need to go to certain specialist lenders, but there's lots that are okay with 100% flat roof.
Right.
They're just geared up for it, and the surveyor knows what to look for in terms of the condition of the roof, etc., when they go around there. So yeah, if it is largely flat, it just means less choice of lenders, really. Doesn't mean having to go to any higher rates or anything, just less choice.
Okay, and it's all questions from me. I keep thinking of actually just one more from me then. If somebody is thinking about buying a property and converting it to an HMO,
yes,
do they need to sort of be upfront about that in the first place, or can they just sort of change their mind, you know, when they bought it? And
yeah, that's quite a tricky one actually, because normal buy-to-let mortgages are not okay with you letting it as HMO, and if it's not HMO currently, lots of HMO lenders won't lend on it because it's a single let property. So potentially what you might have to do in that scenario is buy it with a normal mortgage, but then at the point where you want to rent it as an HMO, you might have to change the mortgage and remortgage it to an HMO. Someone like Kent Reliance, though, is quite a useful lender because they are happy to lend to you in its current condition. They're happy that you are converting it to an HMO, and their only rule is that you have applied for your license within a month of completion. So there are some lenders that are okay to do it, even though it's not an HMO, they know you're going to do it, and that's fine.
right.
But lots of others, you need to change the mortgage depending on the condition and the type of property at the outset.
Yeah,
There are definitely products that are designed for people that are switching a mortgage into HMO.
Yeah, because I seem to be speaking to more people now who are looking at sort of HMOs as an option to sort of build their portfolio and get higher return on investment as well. So
Yeah, and I've also spoken to people that are looking at that because their tenants want that. They don't want to be in a one-bed flat. They want some company if they're going to be working from home or something, which is quite interesting. And then there's other people that don't want to be sharing with others if they're working from home. They want their own space. And so, yeah, there's a lot of change happening.
Yeah, that's good. Right, well, I think your details have been on screen for long enough for people to write them down. So if anybody has any other questions, I can't see any more that have come in, but if anybody has any other questions, then please feel free to contact Scott directly. You've got his email address here and his contact number. So that was really useful. Thank you, Scott. I hope people found that useful. Could you stop sharing your screen now?
Yeah.
And then thank you. And then I will now hand you over to Mira, who will give you an update on all things to do with all the sort of legal side of things and what's coming up in the future. So, hi, Mira.
Hi, Dawn. Thanks very much. Hopefully you can see my screen. It's all okay? Perfect. So thank you for welcoming me to the webinar today. My name is Mira Chindroy. I am Deputy Director of Campaigns, Public Affairs and Policy at the NRLA. Just an introduction to the NRLA for those who aren't familiar with us. We are the largest landlords association in England and Wales. We were formed last year from a merger of two organisations, the NLA and the RLA. And we now cover over 90,000 members across the country. Our members vary in size from those with just one property to large portfolio landlords, but our average member has around 4 to 8 properties. We provide a number of different services and support to our members, including our advice line, which is free to access, downloadable documents and guides on all the issues which landlords may be facing as part of their business, updated information on legislative changes and landlord responsibilities. We have training courses, a whole series of events and webinars, including local events in your area, and also a lot of online content, including our newsletter and our podcast. My team works on the campaigning and public affairs side of things, so that involves a lot of work with national and local government, campaigning on behalf of our members, and representing members at the highest levels. Today I'm just going to give a bit of an overview of what's been happening in the sector over the COVID period, some of the changes that have been brought in during that period, and also some of the changes that are going to be coming forward in the months to come. So first of all, I just wanted to give a bit of an indication around landlord confidence in the sector. So this is quite a detailed chart, but hopefully you can see a bit of a trend. It starts way back in 2013 and goes to Q1 of this year, and you can see that over that period there's been sort of a number of peaks and troughs in landlord confidence, and there was a big in Q1 of 2020, which our survey then with our members was done sort of just at the point that lockdown was happening. But actually, when you look specifically at the letting business, that low of 19% of landlords who rated their business expectations as good or very good has recovered significantly and is now back to pre-pandemic levels. So this chart just shows you from the period when mortgage interest relief was first announced. So there was a bit of a drop at that point. So the Q3 15 number, 51%, was after that period. But you can see that we're now at 44% again. So that number hasn't been seen for a couple of years. So actually landlords are feeling, in the grand scheme of things, relatively positive about their lettings businesses. And to break that down into different areas, you can see that landlords are reporting quite strong tenant demand across the country, with London very much an outlier. So you can see in the West Midlands, there's 66% of landlords who are reporting strong tenant demand. The strongest tenant demand is reported in Wales. London, particularly central London, is reporting much lower levels of tenant demand. I will note that this is from our Q1 survey from this year, so around March time. So we are expecting the results of our Q2 survey imminently. So it'll be interesting to see whether there has been a sort of shift in that London demand as things have started opening up. But overall, we're seeing very much that demand has stayed solid throughout the pandemic, and actually in some areas is increasing as people are moving out of kind of urban areas and into places with more space. So you will be familiar that there have been a number of changes that have happened over the past year as a result of the pandemic, and the government particularly taking emergency measures to protect tenants and ensure that tenants were not at risk of possession proceedings whilst there was a public health crisis. There were a number of changes which took place around possession last year. For a period, the courts were closed. For quite a long period, bailiffs weren't able to enforce possession orders even once the courts reopened in September. And we know from our feedback from members and also from the government's own statistics that there's been a number of delays with possession proceedings over this period. But from June, those restrictions have started to ease, and we were pleased to see that the government took on board our proposals for a roadmap for the private rented sector in terms of moving out of the emergency measures and towards a more normal footing as the public health crisis reduced, and as those emergency measures were no longer needed. So from June, possession has been allowed in England. Bailiffs are asked not to enforce where a tenant has COVID symptoms or is self-isolating. The default notice period was reduced from 6 months to 4 months, with some exceptions. So, for example, antisocial behaviour is one of the exceptions, so that is back to the pre-COVID levels. Also, serious rent arrears. So the definition of serious rent arrears is 4 months or more rent, which is also reduced from the levels they were prior to June. And the amount of notice for where there are serious rent arrears is 4 weeks notice. So if you seek possession under solely rent arrears grounds under Section 8, you can use a 4-week notice period for those cases. However, there are still a number of court procedures which are in place which haven't been changed following the changes in the kind of notice periods and the other lifting of restrictions which the government has introduced. We are expecting that those will start to return to more normality. So at the moment, different more serious cases are being prioritised in the courts, and the courts are, for example, only prioritising cases with their definition of serious rent arrears, which is 12 months arrears or 9 months if that's a quarter of a landlord's income. So we are pushing for those restrictions to begin to lift as well, and you can expect to see some movement on that in the coming months as the wider restrictions begin to lift. In terms of further changes ahead, from the 1st of August, the notice period for non-serious rent arrears, which is less than 4 months rent, will reduce to 2 months notice. And from the 1st of October, pending any changes in the COVID situation, all extended notice periods are expected to revert to pre-COVID levels, and that's for both Section 8 and Section 21. So I mentioned that we have had a number of surveys with our members showing the impact of these restrictions. We've also recently published a report on the impact as analysed through government data. And that report has shown that in the last year, there's been almost 80% fewer possession claims. There have been very few warrants issued, and for areas under local restrictions, such as Manchester, which have been in Tier 4 and other kind of extended restrictions, there have been even worse performances. And many landlords have waited over a year for possession. So we are pushing the government on this issue of this backlog of cases, which has been produced from the closure of the courts and the restrictions which have been in place, and needing to have changes to the court procedure to enable there to be greater capacity in order to deal with cases and ensure that there is a reasonable time period for justice. As I mentioned, there are still these outstanding issues, so the court processes which I've talked about. We are also calling for virtual hearings to increase that capacity in the courts. And there's also the issue of the rent debt crisis. So we have a big campaign on this at the moment. We know that there are 3 times as many private tenants who are in arrears as there were pre-pandemic. The private renters sector has been most affected by the impact of the pandemic on tenants' incomes compared to the social rented and owner-occupier sectors. and there hasn't been any direct support into the sector from government. So we, along with a number of other organisations in the sector, including Shelter, Crisis, Citizens Advice, and debt charities like Step Change, have been campaigning for a financial package to support tenants. And we are specifically calling for a package of grants and zero interest loans to ensure that support covers both tenants in receipt of benefits and those tenants who aren't in receipt of benefits. As research suggests that actually the majority of tenants who are in arrears aren't receiving benefits, but they have been impacted by reductions in income through furlough or because they've had reduced hours, for example. Over this period, there were a couple of other changes that came in. So you might be familiar with the breathing space scheme, which came in from May. This is a debt respite scheme. It was always on the cards to come in this year, but obviously with COVID, there's an additional context to that. Essentially, it provides anyone who is seeking official debt advice through either local authorities or FCA approved debt advisors to be eligible to be granted 60 days breathing space whilst they find a debt solution. And during this period, creditors, including landlords, will not be able to contact the debtors with regard to that debt. So it means that landlords would not be able to seek possession using Section 8, but they can continue to use Section 21. And as part of the mechanism of being in this scheme, the debtors would need to keep up ongoing payments. So, for example, they would need to continue with their ongoing rent payments, but the period of the arrears which are built up and which are sort of protected within the scheme would not be able to be claimed. The scheme is really intended to support those in problem debt to find a solution to their debt. And there is an additional scheme that is in place for those with a serious mental health crisis. So, for example, if a tenant is detained under the Mental Health Act, which we expect will be used much less often. But in any case, this scheme is, it will only be used for those who are seeking debt support and is unlikely to be widespread. But it's important that landlords are aware of it and aware of the advice that we are giving landlords around managing these moratoriums. So full guidance is available on our website. As you might have expected, there were also changes due to COVID to the right to rent checks. So there were changes to ensure that landlords will be able to safely make right to rent checks during the COVID period. These have been extended till the 31st of August. So that means that any right to rent checks can be undertaken under the COVID rules until this period, and from the 1st of September, the requirement to see original documents will be in place. Also, in right to rent, there have been changes because of Brexit. So tenants from the EEA from the 1st of July will be expected to provide a residence card or evidence of their settled status to prove their permanent right to rent, or alternatively can prove a temporary right to rent by showing their passport or proof of entry to the UK. However, existing tenants who you've already checked prior to the 1st of July do not need to be rechecked. And again, we have full details on this on our website. Looking further ahead, the government set out their programme for the next session of Parliament back in May, and we were expecting prior to the Queen's speech that there would be a renters reform bill coming forward. It was proposed in the Conservative manifesto and in the Queen's speech back in December 2019, but obviously a lot has happened since then. So the Renters Reform Bill was intended to abolish Section 21 and bring in a number of other reforms that would see changes to the Section 8 process in order to ensure landlords have certainty around possession with the loss of Section 21, as well as introducing lifetime deposits, which would be a mechanism to enable tenants to move their deposits more easily between tenancies. However, because of COVID, a lot of that, well, most of that work has been pushed back, and so the government has now announced that they will be bringing forward a white paper in the autumn, which will outline their proposals for reform in the sector. They haven't given a date for when there may be a future bill to follow that white paper, but I think once the white paper does come forward, we will have a clearer indication of when that bill might be proposed. Obviously, the abolition of Section 21 will be a huge change in the sector, and we have put forward our proposals for what should be included in that bill in our document Striking a Balance, which is available on our website. We are calling for the government to reform the Section 8 grounds, including introducing a new ground where landlords can gain possession where they want to sell a property, reforming the ASB and rent arrears grounds, and ensuring landlords are able to regain possession where there are issues like breach of tenancy. We're also calling for a number of court reforms, and we've made a couple of proposals around how a lifetime deposit scheme could work. So there is a lot of detail in that document, so I'd encourage you to take a look, and please do also share with us your thoughts on the proposals, which you can do via our website. The Queen's speech also announced a number of other reforms which the government is exploring. So they are looking at compulsory redress schemes for landlords, and this again was something that Theresa May's government had initially announced but hadn't yet been taken forward. They'll be outlining the proposals for lifetime deposits, and they'll be looking at reforms to enforcement and how to improve standards, and that will involve speaking to local authorities to understand more about the enforcement mechanisms that they use. And they will also be exploring the merits, I think they put it as, of a landlord register. So on all of these issues, we are engaging with government. Our Chief Executive, Ben Beadle, sits on a working group which is chaired by the Ministry of Housing, Communities and Local Government Minister, Eddie Hughes, and we are actively involved in those conversations. In fact, I'm meeting with MHCLG today to speak about the register and the redress schemes. Further ahead, there is also a lot of noise at the moment around energy efficiency, and you may be aware that the government has committed to reaching net zero carbon emissions by 2050. As part of that, there will be a role to play for the private renters sector, and there was a consultation at the end of last year around introducing enhanced minimum standards in the private renters sector for EPCs, so a C rating for new tenancies by 2025 and for existing tenancies by 2028, and also increasing the cost cap from £3,500 per property to £10,000 per property. So we are waiting to see the government's response to that consultation. But I think it's important to emphasise that this is the direction of travel. Whatever the outcome of that consultation is, there will be enhanced requirements in the private renters sector if the government is to meet its net zero carbon target. There is also a question around how gas will be managed within housing. We're awaiting a heat and energy building strategy from the government, which will indicate whether they're going to be looking at replacing natural gas with hydrogen and decarbonising the grid, or if they're going to be looking at removing gas from properties. So that is still awaited, and I think it will give a much better indication to landlords at that point of what the future trajectory is. So we are doing a lot of work on this as well, and really pushing the government to be clear about what the long-term ambitions are to help landlords to plan their businesses. And finally, there is also a safety review happening. So you'll be aware that there's a lot of fire safety work happening as part of the post-Grenfell reforms. There is a new building safety bill, which will introduce a number of measures, including a new regulator. And we are also working with the government on reviewing the housing health and safety rating system, which is the system by which local authorities assess whether properties are safe to live in. So the government is looking at introducing minimum standards with HHSRS rather than the current kind of matrix assessment. And we're also looking at updating the LACORS guidance for which helps landlords to understand their duties around fire safety, and hasn't been updated for, I think, over 10 years, so is quite out of date at the moment. So just before we go on to questions, you can, if you are not already, become a member of the NRLA. I ran through quickly some of our benefits at the beginning of the presentation, but there is a lot more that you can find out about online. These slides just give a bit of an indication. And I didn't mention that we also have a number of discounted services available exclusively to members, so you can access those as well. Membership starts from £75 a year for one member and one associate, and you can join via our website. So I think we just have 5 minutes for questions, Dawn.
Myself. That's great. Thank you, Mira. I haven't seen any questions come up as yet, but we'll wait a little bit longer. And that was really, really interesting, actually, especially I noted down about the landlord register and the redress scheme that you were talking about, which is obviously something that's going to be forthcoming. And I think the government obviously will be able to learn a lot from the Rent Smart Wales experience, really, which has been going on for the last sort of 5 or 6 years, I think, which I know I am a member of, because we've got properties sort of that are in the Welsh border. So yeah, there was I think quite a learning curve, really, for them to have done it first, and probably, you know, learning from their mistakes as well. So that's quite interesting.
Absolutely. I think from the NRLA's perspective, we see if mandatory redress is coming in, that effectively creates a register. So we wouldn't want to see replication or duplication, but would be keen to see kind of a more strategic and streamlined approach by the government.
Yeah, and the other thing, actually, just sort of really to involve Scott as well, with regard, when you were mentioning about the EPCs, I'd also noticed something in a publication recently where there are going to be some mortgage lenders that are able to sort of give discounted rates. Is it for EPCs that are of a sort of C rating or above? Is that right, Scott? Have you heard anything there?
They're out now, actually. There's products that are available now. They're calling them green products, and there's slightly different rates. At the moment, they're not head and shoulders cheaper than anyone else. So, you know, there is no super big benefit to them at the moment, but I imagine that will become more of a thing, and you will end up paying a higher rate if you're not at those sorts of ratings.
Yeah, it's definitely something we've been aware of. I think at the moment, because interest rates are so low across the board, it's hard to differentiate that much, but I'm sure there will be a push to have more of these types of products and more of an incentive around them.
Yeah, it obviously means that, you know, everybody is really jumping on the same sort of bandwagon really to sort of push everything in the right direction. So like you say, it is going to happen, whether it's going to be sort of tweaked from what the proposals are at the moment or whatever, but everything is heading in that direction, definitely. We've got a question. Oh, is it from Scott? Is it from you, Scott? If bailiffs can't go in due to self-isolating tenant, will that not be an excuse that could go on forever to avoid eviction?
So my understanding is that they are instructed to accept that on one occasion, and obviously once that self-isolation period has ended, then they will be able to undertake the eviction. So it's, yeah, there is a mechanism in place to avoid that happening, but it's, you know, still quite early days yet. So I think we will be keeping a keen eye on sort of feedback from our members around what's happening on the ground.
Yeah, I can imagine them saying they popped out to get a sandwich and they've got to isolate again because that sandwich shop has told them. Yes,
we've certainly had experiences over the last sort of 16 months really with certain tenants who are sort of self-isolating, and we've had to sort of work a way around things. So yeah, it's been quite interesting over these last few months. Hopefully all coming to an end fairly soon though, so we'll have to watch this space. Right, well, we don't have any other questions. David has said very good presentation from Mira as well, so thank you, and thank you both for attending today. I hope those who are watching now and those who are watching the recording afterwards have found it really useful. We are aiming to do these webinars every other month and continue to do them for the foreseeable, so we'll have some different speakers next time as well. And again, thank you very much both for joining us today.
Thank you very much.
Okay, thanks. Bye-bye.
Thank you.
Bye.
Bye.